Hey guys, how you doing? It's Thursday, December 7th, I think it is. Anyway, I wanted to give you guys a little update on what's going on with the dollar. I know we've been talking about it for a while, and in my service we've been trading accordingly. So I said back in September that I don't think the Fed is going to raise interest rates next week. Okay, next week is a big day. Prepare for a lot of fucking volatility. I'm telling you right now, a lot of volatility. All the dollar pairs and commodities, gold, silver, everything's up to interpretation, but this is what I think is going to happen. Okay, but before I get to my prediction, you just got to understand something. Okay, the mechanism the Fed uses, okay, for money supply, for interest rates and stuff like that, the monetary policy they employ has two main goals. One is prices, inflation, okay, to control that, and the other is to stimulate the economy for job growth. Okay, that's the main, supposedly the main two goals of the Federal Reserve. They do much more than that, but that's primarily their objective. So you got to understand, historically, just like it happened in 2008 after the financial crisis, historically, what the Fed does is they lower interest rates after a recession. Okay, that's their main tool to stimulate the economy. They make money cheap again. They buy bonds. They pump the market with free money, essentially, to so to speak, to stimulate the economy. There's one little fucking problem this time around. If a recession hits, we're at fucking zero interest rates as it is. So they have no room to go down. They have no room to cut. So what they're trying to do, you have to understand what they're trying to do is they're trying to catch up and start to raise them, because I think they're expecting the next recession to hit so that they can cut interest rates again. Okay, so their schedule is to raise them by 1 point in the next 12 months, a quarter point basis every 3 months. Okay, starting this December the 13th, next week. Again, I don't think they're gonna do it. Trump's new Federal Reserve head appointee is basically a fucking mirror image of Janet Yellen. Okay, he's one that believes in cheap money, zero interest rates, print. So I don't think much is gonna change. However, for the sake of having an idea on how to trade this is what I think is gonna happen. Either, they might raise him. Okay, I'm not saying that that's out of the question. They might raise him. They say they will. I don't think they will, because inflation is still very low, and I just don't think they will. I think they'll find an excuse. And if the government shuts down this week, they won't have time to take care of the Fed, the rate hike next week. Okay, they're expecting a government shutdown this Friday, tomorrow. So you got to keep in mind, based on the technicals across the board, dollar Canadian, euro dollar, Aussie dollar, pound dollar, I think the dollar is looking very bearish. I think we're about to resume the downtrend on the dollar across the board. And the technicals, I'm telling you, the technicals don't lie. They predict, typically, if you know how to read them, they predict these fundamental announcements, because prices are, the technicals typically are already priced in ahead of time. Okay, so I think the dollar is going to resume the downtrend in the next 6 months, pushing euro higher, gold and silver higher. Dollar Canadian should fall 1,000 pips. Euro dollar, I think, will hit 125 at least. So you got to understand, it's almost a no risk trade to short the dollar at this time. I would wait for the decision, because there's going to be a lot of volatility, but I'm already in across the board. I'm long pound dollar, I'm long Aussie dollar, and I'm short dollar Canadian. Okay, because If they do raise them, I think there's not going to be much of a reaction, because I think it's already been priced in. If they don't raise them, and the markets hate fucking surprises, because everybody expects them to raise interest rates. If they don't raise them, if they find some excuse not to do that, I'm telling you, the dollar is fucking doomed. Okay, so it's a zero risk trade either way by shorting the dollar, because if they don't raise them, then you'll make a killing. Dollar's going to tank. Gold's going to go up, silver's going to go up, pound is going to go up against it, the euro's going to go up against it, Aussie is going to go up against it, and dollar Canadian will crash. If they do raise them, I think it's going to be, the reaction is going to be short-lived. There might be a little pop, and then we resume the downtrend anyway. So that's what you got to understand. The fundamental basis behind monetary policy is to stimulate the economy and to make free money available once the recession hits. Okay, so they're trying to catch up now, because we've been at zero interest rates the last 9 years almost with Obama, and they're trying to catch up and raise them really quick, because I think they're expecting the next recession to hit so that they can then lower them again. Because right now there's no room to lower interest rates. We're at 1%, basically 0% growth in the last 9 years, 0 to negative interest rate growth still. Okay, so if a recession hits tomorrow, where the fuck are they going to go with interest rates? They can't go much lower than this. Okay, so the notion behind the fact that they want to raise them so quickly is that I believe they expect, like I've been saying for a few months now, that the next recession is here. I'm sorry. I mean, I know the markets are making all-time highs, but I'm telling you, gold and silver are holding pretty steady. So that correlation is broken, because proportionally speaking, with these new highs in the markets, in the indexes, gold and silver should have been tanking way more than this. So one of those has to be wrong. And my guess is markets are in crash territory. I'm very, very convinced bubbles can go on for quite a long time, because they're being propped up by the Fed, but eventually the fundamentals will take over. And if the tax bill passes with Trump, you know, that's another $1.5 trillion deficit. They can't account for that, for the tax cut. Okay, so that's more burden on the dollar. So, you know, it's just another liability. So just be prepared. Next week, the 13th, big decision. I'm telling you, prepare. Just hang on to your fucking bootstraps, because it's going to be a very, very volatile next 2-3 weeks. My bias is the dollar is done, regardless of what they do. But I don't think they're going to raise them. I think they're going to find some excuse, or they might raise them this time, but they'll say we'll be more cautious in the next few months, because maybe the job labor isn't as strong as we want to, the retail isn't as strong, and stuff like that. Okay, either one of those two scenarios will tank the fucking dollar. And if they don't say anything and still raise them, I think it's essentially been priced in, and I think we'll still go down in the next 6 months. Okay, so just wanted to give you guys an update, because I've been getting a lot of messages on what I think, you know, is going to happen. All right, so just hang tight.